insurance policy is kind of like a safety net or a blanket that they have for when their programs are deficient. And if that net is going away, or becoming, not as protective as it has been in the past, then that's really something they need to hear and plan for. So, hoping maybe you could run with that.
Yeah, sure, Ryan. Look, happy to. And I think the important message that we'll get across is the market has definitely changed. And if you wind it back 5 years ago, pretty much any industry could get coverage with a limited amount of questions, especially if you're in the, below, say, 500 million US or 250 million US in revenue. It would ask you 4 questions: what's your industry, what's your revenue, how many records you've got, and one other question, and the insurer would give you coverage. And really, you look at there, it's the cost of capital was cheap and the losses weren't that great. Over the sort of last 12 to 18 months, definitely the last 12 months, the big change has been in ransomware. And it's not so much the frequency of ransomware, but just the sheer volume that the attackers are asking for. And the insurers are losing a lot of money. Last year's book, pretty much, if you look in Lloyd's of London, what was taken in premiums has been spent and then some and claims. So it can't carry on like that. So what you've seen is a shift, like a big pendulum swing from really not asking much in the risk questions to asking a significant amount and very detailed risk questions as well. And the insurers are, it's very much a seller's market at the moment. If the insurer doesn't get the answer it's looking for, it's an industry that they're a little bit concerned about, because some insurers have different industries they like. They won't offer terms, or they'll offer you a reduced coverage for a much higher premium.